When you look at that chart, it's telling us that the direction of travel is upwards, and that makes sense with the information we've got. If it was going in the other direction, I'd say, maybe somebody's lying to us. How could this price be going down when allegedly the demand's going up? But obviously we're told, and we have to believe this, that the demand is going up, especially from the electronics industry. So I personally think this chart is confirmation of what we already know, that there's a supply shortage, and that shortage is going to get bigger.
People were talking about $40 silver, $50 silver. I'm still bullish, and I'm still continuing to try to stack silver as much as possible, as well as gold, of course.
Silver demand has reached unprecedented levels, with the Silver Institute's World Silver Survey reporting a record 680.5 million ounces consumed in 2024. This surge reflects silver's expanding role beyond traditional uses, particularly in photovoltaic production, as the renewable energy sector accelerates global adoption of solar technology. Clive Thompson, a retired Geneva-based wealth manager with extensive experience in precious metals, notes that silver has been experiencing a supply deficit for several years. This trend appears to be intensifying. This shortage creates natural upward pressure on prices as markets attempt to balance insufficient mine production with growing demand through increased recycling efforts. The numbers illustrate the severity of this imbalance. Silver has maintained a structural deficit since 2021, with the cumulative shortfall spanning 2021 to 2025 reaching nearly 800 million ounces. The electrical and electronics sectors have been the primary drivers, with demand increasing by 51% since 2016 as technology applications continue to expand. That's essentially Clive's point earlier. Ongoing supply shortages, growing industrial demand, and the upward trend in price all signal a continued rise in silver's value. Electronics currently represents about 33.9% of total silver consumption, making it the metal's most extensive single application. This proportion is expected to grow as the development of artificial intelligence infrastructure and advancements in clean technology create additional demand streams. Thompson observes that despite typical short-term market volatility, silver's price trend reflects these underlying supply-demand fundamentals, where industrial and electronics demand has already exceeded mine production capacity. This video breaks down the outlook for silver and gold, highlighting how a deepening silver shortage could push prices higher. If you value data-driven financial insights, like and subscribe to Weekly Insights. Your support means a lot, and we hope you find the content helpful.
I don't think that charts on their own, without external information, tell you the future. But when you have external information, then you can interpret it in a way which will tell you the future. And so what I see here is a rising silver price. Okay, that's useful. I mean, okay, it's come off for the last week or so. That's neither here nor there. And at the same time, we know that the demand for silver exceeds the mined supply, the demand coming from electronics industry and other industrial usages. So that, according to all the estimates, and my primary source for this is the Silver Institute, the gap between mine supply and industrial use is going to grow bigger. It's been growing. We've been in a deficit of silver for the last few years, and that explains why the silver price has been rising. It has to rise to suck out recycled silver into the marketplace because there isn't enough silver coming out of the mines. And that gap is going to get wider in the future. So logically, silver should continue to rise to suck out that recycled silver. So do we get confirmation by looking that that's actually happening? What's the chart telling us about itself? Well, the chart is actually, when you look at that chart, it's telling us that the direction of travel is upwards, and that makes sense with the information we've got. If it was going in the other direction, I'd say, maybe somebody's lying to us. How could this price be going down when allegedly the demand's going up? But obviously we're told, and we have to believe this, that the demand is going up, especially from the electronics industry. So I personally think this chart is confirmation of what we already know, that there's a supply shortage, and that shortage is going to get bigger. Big market here that you see, the biggest single asset that you see on that list is gold, which has got a 23 trillion market cap. But as we come down the scale, we get to Nvidia at 4 trillion or over 4 trillion. And you're going to tell us a little bit about Microsoft as well, Mario, I think. And then you get down to silver, which is half the value of one stock. It's half the value of Nvidia, or if you like, half the value of Microsoft and probably one or two others. So the silver market, the point I'm making here is the silver market is only 1/10 of the size of the gold market and less than half the size of the two biggest stocks on Wall Street, at least. It's a very small market. So if we have some sort of loss of confidence in let's say the Nasdaq or the Mag 7 or the top stocks, where's that money going to go? You only need a very small amount of it to go into the silver market. It will push the silver price a very long way. That's my point. Silver is a tiny market compared with gold. But if you look down a little bit further to platinum, that's silver's 1/10 of gold, but platinum is nearly 1/10 of silver.
Yeah.
So it's like nearly getting on for 1/100th of the amount of gold. So even a tiny bit of money moving into silver or platinum will push the price a long way. And I have discussed with you the trigger for what might move gold up. So if gold goes up sharply, and there is a reason to think it will, if gold goes up sharply, there will be sellers of gold and piling into silver, but that will have a much more leveraged effect on the silver price than it does on the gold price. Because if you take $1 trillion out of gold, it hardly moves the market. But if you put $1 trillion into silver, it pushes you've got this hugely leveraged effect because silver's only a 2 trillion market. And I have written that article the other day about what will happen if Scott Bessent does go through with his plan or his words to monetize the asset side of the Treasury's balance sheet, of which the most undervalued asset is gold, and the biggest asset is gold, and the most liquid asset is gold. That's the one thing they can monetize and make a ton of money very, very quickly, paying off the current year deficit, paying off next year's deficit, and of course, reducing their national debt. Now, we don't know if he's going to do it. We don't know, and if it is done, we don't know when it's going to be done. But if it is done, it's likely to be done at a much higher gold price, engineered gold price, than the current price, which would have the very leveraged effect on silver. That's my point. All my career, I've been hearing people point to assets which have just risen in price, and it doesn't matter whether it's a week after or a year after. Maybe they're going up for 5 years or 10 years or 20 years. They'll point to the asset and say, it's too high, it's going to crash. Well, what I've come to learn is when people say this, they're trying to justify why they didn't buy any at the lower price. People have got to get this out of their head that yesterday's price was the right price. I mean, but the world is full of people who are looking for patterns in the price. They see a price pattern, and they always think that, I mean, this is not everybody, by the way, it's not me, but there are people out there who always think that last week's price or last month's price or last year's price was the correct price. And because the price is different today, it's got to go back to the old price. And then they try to justify the fact they didn't buy that asset when it was a much lower price by saying it's overpriced now, the old price was the correct price. But I think not. I mean, look at the increase we've seen in government debt and the money supply over the decades. It's literally ballooned through the roof. And that's what's driving the price of these limited supply assets like gold. I mean, there's a very good chart pattern, which only really applies if you could use it in conjunction with knowing other things. And that's called the flagpole, a bit like the corner flag on a football field with the little triangular flag. So when you see the price rising, and then it pauses and it comes back a bit and then goes up and down in a sort of zigzag pattern, but moving towards a triangle at the end. There I see a very nice flagpole pattern. Now, provided you have other information, which we do have, and we've talked about that, you can. That in general is a very, very bullish signal, because when it breaks out of that triangle pattern, it moves a long way and in the direction of the flagpole. So in general, it should go up. But as I say, you've got to have other information, which we already do have because we've discussed it many times. But you've drawn the flag there, and you see the pole on the left-hand side of it. So it could take a few months before it breaks out, but when it breaks, it's going to go a long way. The weaponization of the dollar does mean that there's now a real worry that from countries all around the world that they need a plan B. And to have a plan B, you've got to have something which actually works. So an alternative to the dollar is something which everybody is working towards. And it's not. I think it's not just the BRICS, but obviously it is led by the BRICS. So I think it's only a question of time before we see some sort of alternative currency system starting to emerge. It will take some years. It's not like it's going to come out tomorrow. And by the time it does emerge, Trump will be long gone anyway, because he's only got a 4-year term. So, but I think it's coming. And I think down the line, the BRICS countries will have an alternative payment methodology, and they won't have to use the dollar. They'll probably be using some alternative system, which I think will include gold. I think it will have to include gold, albeit that the gold won't be moving, but a currency, perhaps a new currency, will be moving, which is convertible to gold.
Mario Innecco, a UK-based financial markets analyst, observes that gold and silver have experienced sharp corrections, with silver particularly affected. However, he emphasizes examining broader monthly charts to gain a deeper understanding of the longer-term picture beyond current investor concerns. Silver traded at $36.51 per troy ounce on Friday, down 0.5% from Thursday's $36.69 close, according to FX Street data. Despite recent weakness, silver has gained 26.35% year-to-date, indicating the correction occurs within a strong overall performance context. However, gold faced similar pressure, hovering around $3,290 per ounce and tracking toward its worst weekly performance since late June. The strengthening US dollar, driven by President Trump's aggressive tariff policies, including a 10% global-based tariff and retaliatory duties up to 41% on countries without US trade agreements, weighed on precious metals. Innecco suggests that China may be significantly underreporting its gold reserves, potentially holding 30,000 to 35,000 tons versus official figures. This strategic underreporting would enable continued purchases at current prices, as revealing such holdings could spike gold values and reduce the real value of their US dollar reserves. Meanwhile, China's official activity supports sustained buying pressure. The People's Bank of China reported that 2 tons were purchased in June, marking the 8th consecutive monthly increase and bringing official holdings to 2,299 tons. Through the first half of 2025, China announced 19 tons in purchases, increasing gold's share of foreign exchange reserves from 5.5% in December 2024 to 6.7% by the end of June. That's what Mario's point earlier was. China may be quietly accumulating far more gold than reported, a move that could significantly impact global markets beyond the current price dip. Let's get back to the video.
In the last few days, gold and silver have corrected quite sharply, especially silver, and people are worried. But looking here, and I'm going to bring up this chart, and then we're also going to look at market caps, but bringing up this monthly chart of silver. So we're already in the month of August now, but in the month of July, we closed at 36.72 or thereabouts. So it's the highest closing level since August 2011. So silver actually closed, at almost a 15-year high. And I think that's positive. Yes, it's come off from the highs, as we can see here. And this candlestick looks a bit weird. I don't know if it's bullish or bearish. There's a chart of gold. I've seen videos now. People have sent me videos. I'm not going to mention names of people saying, oh, be careful, gold could crash. But anything's possible. But I personally think we're just in a consolidation here. If you look at the weekly chart, it's pretty much what happened here and what happened here. It takes a little while. I think the reason it's taking longer now, it's because this move here from the beginning of the year was very strong compared to these previous 2 moves. So it will take a little longer to take out all the speculative and longs and stuff. And I don't think it's going to stop these indicators like the debt and money supply. We've seen M2 money supply, not just in the US, but in the EU, Australia, Canada, China. It's making new all-time highs, and they're not going to stop the wheel moving, the hamster wheel. I saw President Trump posted something recently, and he said, too late, Powell needs to cut. The economy is doing well, but we need people to be able to borrow, to buy their homes and to refinance. So it seems to me that the Trump administration and other administrations around the world, what they worry is about is people when people stop borrowing, because that could implode the whole financialized economy, and that would mean really it would cut all the tax revenues. It would put governments in real trouble. So here's the monthly chart, Clive. It looks quite weird. The last 2 months or 3 months, we kind of settled pretty much at the same level, and we've had a little bit of a range in between. If anything, I think if Greenspan was the chairman of the Federal Reserve and he saw what gold's doing, what the stock market is doing, he probably would be raising rates or definitely not cutting. But today we have a really important number, which is the non-farm payroll, which comes out, well, most of the time, the first Friday of the month. And I saw that the expectation is quite low, only like 100,000 new jobs. I think the U.S. economy needs like over 200,000 to keep with the demographics every month, even though this statistic is all a survey. It's not like real numbers. And I could see a very weak number. And why is that? Well, because the U.S. government controls the BLS. And I think if we start seeing weak jobs numbers, maybe that will be what pushes the Fed to cut rates. I don't know, am I being a little bit too conspiratorial? I wanted to touch upon BRICS, because a week or two ago, Trump said that BRICS were irrelevant. They had a meeting, no one showed up. But now it looks like indirectly, he's like declared war on BRICS. He's not happy. He says BRICS are anti-dollar, anti-American, and I think that's wrong. I think BRICS just want more. They want more multilateralism. They don't want a unipolar world, and they want to be heard. But be as it may, he's imposed some tariffs like on India, Brazil, and he could impose secondary tariffs on China for buying oil from Russia. And it seems like those countries in BRICS are being targeted, not because of the trade situation, but political situation. So it definitely seems to me that he's concerned. And I listened to a guy called Alex Christoforou. He does the Duran. He's a really good geopolitical analyst. And he said that it looks like the trade tariffs are the new sanctions. So just wanted your view on that, whether this attack on BRICS could backfire on Trump, because they could come back and say, well, we're going to stop using the dollar even more. We're going to offload a lot of our treasuries. Why would the U.S. Treasury be taking delivery of gold? Well, maybe because they will have to do an audit, and a lot of the gold that they had there has been leased out. And when you lease gold, you have to ship gold to the people that you lease the gold to. And you can't have an audit if the gold isn't there. And you can't really do a credible revaluation of the statutory price if the gold isn't there. So, or it could be Berkshire Hathaway, Clive. I saw as well that their, and I'll bring it up here, that their cash positions are, like it says here, Berkshire Hathaway's cash position is now 30% of their total assets. So they're concerned about something. There is speculation that they have like 30 or 35,000, but maybe they want to keep it like this because they want to keep buying. If they came out and said they've got 30,000, the price of gold would go through the roof. Their dollar reserves would plummet in terms of real value, I think. So yeah, it's a good point that they will probably continue to buy quite a bit and to match the U.S. And we don't even know if the U.S. has, and the U.S. is the other speculation, whether they have it or not. And one thing that's concerning is the little UK here. We only got 310 tons. I mean, we have less than Portugal, Taiwan, Poland, Turkey. I know Gordon Brown sold half of it, but even if he hadn't sold half of it, we still wouldn't have that much. And it's interesting that Germany and Italy, they have quite a bit, and France.
Silver continues to gain traction as both a monetary asset and an essential industrial metal, making it uniquely positioned in today's evolving economic landscape. With rising demand from technology and green energy sectors, alongside growing investor interest, silver's outlook remains increasingly favorable. At the same time, gold continues to reinforce its role as a cornerstone of financial stability, offering reliable protection against rising inflation and global uncertainty. Together, both metals highlight the renewed relevance of precious metals in a world seeking real value and long-term security. Is silver emerging as the top-performing asset in today's shifting market landscape? Share your thoughts in the comments below. If you found this breakdown valuable, be sure to like the video, subscribe, and share it with fellow investors who need to hear this. We'll keep bringing you top market voices and the insights you need to stay ahead of the curve. Thanks for being a part of our community.